Good day, everyone, and a warm welcome to all of you participating in Suven Pharmaceuticals 9M and Qtr3 FY21 earnings call. We have with us today Mr. Venkat Jasti, the Chairman and CEO, Mr. Venkatraman Sundar, the Vice President, and Mr. Subbarao, the CFO. Before we begin, I would like to mention that some statements made in today's discussions may be forward-looking in nature, and a statement to this effect has been included in the invite which was sent to you earlier. We should start this call with opening remarks from the management, following which we shall have an interactive Q&A session. I would now request Mr. Jasti to share his perspectives on performance and outlook. Over to you, sir.
Good afternoon, everyone. Joined for this conference call on the earnings of ending the 9 months ending December 31st, 2020. As you could see from the results, I think we could catch up to some of the slack which is for the past 6 months. And things are moving well, and except that some logistics problems and little bit high cost on the transportation and some raw material increases and all that stuff as usual due to the COVID situation. But the things are coming to very much normal at this stage, and we also see some new additions to the projects during this quarter. All in all, it is going well, and we, as per the previous concalls, the guidance of 15 to 20% growth is will be there for the year ending March 31st. And I think it's better for me to answer the questions rather than giving you, because everybody has the results with them, and the questions may be answered properly rather than I giving you a run around for these activities. So I leave the floor open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Mitesh Shah from ICICI Direct. Please go ahead.
Thanks for taking my question, and congratulations for the strong set of numbers. My question is regarding your revenue. Means sharp jump in the pharmaceutical, and SpecChem has a sudden drop in the SpecChem revenue. Is there any one-off, or it's line of your management expectation?
No, there is no one-off here, because in this business, everything is a one-off, if you see, in a class business, in the sense that if your supply is a phase 1 compound and the repeat business will not come back into another 1.5 years to 2 years, similarly the other phases. So there is no one-off. This is a product mix, and the number of projects we have done and the supplies we have done. So there is no one-off as of today.
So basically, even last year also in the Q2, sudden jump in the sales, and the year Q3. So is that because of the shipment delay or shipment timing difference over there, or on one particular time you having the better contact? I would just want to know about that. How you manage the means your capacity, because it's a sudden jump in the Q3 last year Q2. Is that because of the shipment, or do you manage that too?
Sometimes it may be the shipments done in the previous quarter could have come into this quarter also. There's a possibility, always it happens, last 10 days shipments may move to the next quarter. But in general, you cannot compare quarter on quarter. These are the projects. Suppose it's not a generic product where I make 10 tons and supply like that. Here is a project we take up, and sometimes by the time we start the production and by the time we ship it may be 4 to 6 months to 8 months. So it is a mix, and it is the duration. You have to see year on year rather than the quarter on quarter basis.
Can you expect that your guidance will surpass in FY21, or still you maintain that?
I couldn't hear you properly.
Guidance of FY21.
Can you expect that surpass your guidance actually?
No, we still stick to the same guidance what we have told. This is 15 to 20% guidance and growth.
Okay. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Ankush Agarwal from Stallion Asset. Please go ahead.
Yeah, hi. Thank you for taking my question, sir, and congratulations on a good set of numbers. Firstly, if you can give some data points in terms of how much was the formulation sales for the quarter and what is the royalty and profit share that is included in that. And also on the ANDA front, if you can help me know how many ANDA filings they have done till now, how many are commercial, how many are approved, and how many are under development.
What is the numbers?
9 months.
Sonny, you have the numbers?
Yes.
Go ahead.
Yeah, we have formulations for this quarter is about 12.55 crores. And others about 10.7 crores. And for the 9 months period, formulations total is about 31.43 crores. And other services about 36.66 crores.
Okay.
The NDAs are 12 in number so far. 6 has been approved. 5 has been, last quarter one small product has been launched. And this quarter one Anada will be launched. And another 6 are there. We expect them to be approved sometime in the calendar 21.
Okay. So till now there are 5 commercial.
Right, sir.
Okay. And sir, how much was the profit share or royalty that was included in the formulation sales for the quarter?
That is a trailing time, and it takes time by the time you get into the things. But we are not giving you the breakup at this time because it's a moving
Part
car.
of the profit sharing is already included in 31.43 crores. It's part of that.
Yeah, right. Actually, for the last quarter, you gave a number of 2 crores, so I was wondering if you can give it for this quarter. No worries about that. Okay.
No, that's the royalty of Malaysia, that's what we are given actually. Beyond that, this profit share we are not trying to split because there is a time lag from one quarter to the other quarter. If I sell this, maybe next quarter or the following quarter we'll be getting a profit share. So for us, it's all budgeted at our formulation revenue. That's what it really means.
Right. And so my second question was if you can help me understand how the business economics of our specialty chemicals and the pharma CRAMS is different. Because till now, in case of specialty chemicals, you have been able to give some kind of visibility in terms of when a molecule is going to come online. And back in 2015, when the first time we had one specialty molecule, you had given a guidance that it's a contract for next 5 to 7 years. But in case of commercial CRAMS, you have been saying that it's an understanding, it's not a proper contract. So if you can give me some understanding like how the business economics is different in terms of how the development cycle is different for a specialty chemical or commercial CRAMS project.
See, in the CRAMS, until it becomes a commercial product, you don't know the volumes or whatever it is. Even when it becomes commercial, you don't know whether it is a yearly or 18 months or 24 months cycle it will have, depending on how it behaves in the market. Wherein specialty chemical, when it becomes a commercial, they'll use some kind of a guidance compared to the pharma CRAMS. And based on that, we give you the guidance. So that's what the difference between the pharma CRAMS versus the specialty chemicals CRAMS.
Right. And sir, is there a difference in the development cycle for these products?
Which one? What is it again?
Is there some difference in the development cycle between a commercial CRAMS on the pharma side and on the specialty chemical side?
No. Chemistry is chemistry. It's only the way it is going is the question, but no difference.
Okay, got it. Thank you for taking the question.
Thank you. The next question is from the line of Venkat from 3 Sigma Financials. Please go ahead.
Thanks for taking my question and congratulations for an excellent quarter. Sir, during the last quarter, you mentioned that we are trying to have partnership with MNCs to manufacture in India. So is there any status update on that?
Yes, we have said that we are in touch with them and it is going on, but the time it takes is 2 to 3 years minimum before you get anything, because it has to be a understanding has to happen, and the evaluation by the PO teams has to come in and do the exercise, and then again the validation, all these things. It will not happen overnight, quarter on quarter it cannot happen. Things are going on. We're talking now to 2 customers. They are inclined to look into this aspect, not that we have got any business out of it.
Okay, great. So my next question is, we are hearing that large European companies are moving towards green chemistry and asking their vendors to move towards that. Can you throw some light on that, if there are any plans for us as well?
That is a part and parcel of our core R&D process. Whenever we do this, we try to embody this green chemistry principles. Because it's not today we are doing that. It is from the beginning. But there is only so much green you can do in the chemistry. Not everything is possible. But yes, it is a part and parcel of the developmental cycle.
So there will not be any additional expense if there is any move towards green chemistry, insistence from European companies moving forward. Is my understanding right, sir?
There's nothing like moving. Every chemistry will have some steps where highly polluting you will try to do by doing a different synthesis routes and different chemicals using it to get the same product. And some kind of automation and some kind of a one-part reaction, so that the sites, other products will not form. With a few products only will form. All this is part and parcel. There's nothing like a separate thing you have to set it up. Chemistry is done in the same, but at the same time you try to optimize the process what you have to reduce the pollution load. Either the emissions or the liquid emissions or the liquid effluent or the solid effluent. This is what the green chemistry is all about.
Okay. Thank you very much. I don't have any further questions.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Abdul Puranwala from Anand Rathi. Please go ahead.
Hi, sir. Thank you for the opportunity. So just one question on the CDMO pharma space. So could you please provide any color on how many number of molecules we've been able to add this quarter, and what number of molecules we're generating this kind of sales for the quarter?
See, I think last time also I have given that correlating with the number of molecules is not practicable. So only thing what I can tell you is compared to the earlier 2 quarters, we started getting the new projects which are going to give revenues in the future, not right away. But the number of products and because these are all mix and match, and I cannot correlate with one another. So that's why we are not giving you that kind of a breakdown at this time.
Sure, sir. And one more question, if I may. The 15 to 20% PAT growth guidance is for this year. So would you like to provide any guidance for next year, or how would FY22 pan out for us?
As of now, I cannot provide too much of because our visibility is only for 6 months. But the traction is good. We hope to achieve the minimum similar type of things that I hope to achieve, but not having any visibility for me, I cannot guide anything. Maybe next conference call I'll have visibility of the next 6 months. That time I'll be better prepared to answer your question.
Sure, sir. That would be all from my end. Thank you for answering my questions.
Thank you. The next question is from the line of Rahul Picha from Multi-Act India. Please go ahead.
Yeah, thanks for the opportunity, sir, and congratulations on very good numbers. Sir, firstly, on pharma CRAMS, in 9 months FY21, we have already done a revenue of 489 crores, which compares to about 468 crores in the entire last year. And earlier, we had guided for about a 20% growth in this segment. Now the numbers that we have achieved in the first 9 months, this it seems to be much higher than what we had earlier guided. So where exactly has this positive surprise in pharma CRAMS come from?
It is the product mix, and also the duration of the project. Sometimes the project will be 3 to 4 months, then it will be a period there, and sometimes the projects 3 to 4 months, and also 5 to 6 months also sometimes puts into the same quarter, so it looks heavy. So you cannot compare quarter on quarter, but the year on year is what the guidance. Last time when it is less, everybody said it's going down, but I was telling all the time that you don't look quarter on quarter, because these are all lumpiness happens in this business model, and there will be year on year growth will be there, and that's what we are trying to achieve.
Okay, so you mean to say that you still stick to the 20% growth guidance for this segment?
Yes, 15 to 20% guidance as of today, yes.
Okay. And secondly, sir, it seems that the profit share recognition on our 2 ANDAs that we had launched by H1 hasn't still meaningfully contributed. So what has been the reason for that?
What is it again?
Sir, we had launched 2 ANDAs by H1 this year, and we were expecting the profit share from those
the profit share has come, but we are not giving you each item by item profit share and the sale prices and all. We are lumping up all in one thing. As you know, these are very, very small molecules, and you will not be having a bumper crop like the big pharma, like other big pharma. We are saying this is an average exercise, and but it is going good, and it will grow at 20 to 25%. So all put together only. We cannot give you a breakup of each every item.
Okay, sir, I get that. But sir, earlier, in the earlier calls, like we were discussing about what could be the potential profit share contribution per ANDA, and you were saying it could be 2 to 4 million per product. So if you compare
maximum of, I said, all put together.
Okay.
Not everything will be that line. I also said 500,000 to 4 million.
Okay. So the products that we have launched is
profit share. I think you misunderstood. That's not profit share. That is the contribution from the sale plus profit share.
Okay. All right. Okay. And sir, lastly, on this Spec Chem segment, this quarter our revenues were materially lower. So any specific reason for that, or it is also due to normal lumpiness in the business that we usually
No, this is a requirement of the customer, but at the end of the year, it will be, we say the same thing. It will be remain the same as like the last year, which is a more or less flat number. So we'll catch up with that, whatever the shop. Because sometimes it goes and a couple of containers don't go, even though they go and they don't come into that sale, it will happen. So, but at the end of the year, you will have the same number like last year.
Okay, got it. And sir, just lastly, a small clarification on the ANDA again. So we had launched 2 ANDAs in H1, and after that in Q3 we have launched one more, and in Q4 we are planning to launch another one. Is that correct?
Yes.
Okay. And the 2 that we are launching in H2, are they similar in size to the ones that we had launched in H1, or are they larger, or?
No, smaller size, very smaller size.
Okay. Thank you.
Thank you. The next question is from the line of Jeevan Patwa from Candy Floss Advisors. Please go ahead.
Yeah, hi sir. There are only 2 questions. So last time we announced that we are doing 600 crore Capex. So will it be possible to share any breakup of this Capex, how we are going to spend this?
Yeah, it is in the drawing board. There is a enabling resolution we have taken from the board. That's why we announced it last time. And as I said, this is for 3-pronged effort. One is for the relocation of the R&D center, which will take a long time, 2 to 3 years. And the other one is the replacement of a block in the Suryapet. And then some balancing equipment and a small block in the Pasha Mailaram. So these are all we are working out. Our project teams are working out. The amount is around 600 crores, but we are not finalized how much goes to each activity. I think hopefully by the next Concall we'll have all the answers, and we'll be starting sometime in the first quarter of next year only, any activity, not until that time.
Okay. And secondly, will it be possible to give any update on the Suven Life? So you have given a footnote in the Suven Life results, but if possible, can you just guide, how you basically see the future in the Suven Life? Whether you are going to go for any out licensing or you are going to go for listing the neurosciences. So what's the thought process there?
First of all, to out-license particular product, you need to have a positive result, right? Still, this narcolepsy trial is undergoing, and it because of the COVID delayed by 15 months so far, and we hope to finish this trial by the end of the calendar 21. That's one part. And we are also trying to ascertain what indication we should go for the 502 for the because first trial it did not make the endpoint, but the secondary endpoint met. So we are trying with US FDA and some question answer sessions with them to go for a new indication. We are almost finalizing that. We'll be knowing that by May. Which most probably will go for agitation and aggression trial, which will again for 3 years. And similarly, we are going to go after the trials for the 4010 for the another dementia study. These are all going on. With respect to the collaborations, we are always working on, but success only will bring the collaboration. With respect to the IPO or something like that, if you know, for a value-based IPO, you need to have again positive success in the clinical trial. But we are working with some customers for a strategic alignment, collaborations, and all that stuff. But it's not nothing is finalized yet.
Okay. Sure, sir. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good afternoon, sir, and thanks a lot for taking my questions. Sir, this pertains
Mr. Gupta, may we request that you speak a little bit louder, please?
Yeah. Sir, this pertains to the earlier question on the Capex plan. By when can we get the proper split of this 600 crore announced Capex?
By May.
By May. Okay. And the other question was, sir, this year you said that you have around 15 to 20% revenue growth guidance. Any number that you would want to give, given the 6 months visibility that you have for the first half of next year?
Yeah, 1 quarter will not give me the whole year guidance, so I'm holding until the next conference call.
Okay, sir. Thank you, sir, and thanks a lot for taking the time.
All right, thanks.
Thank you. The next question is from the line of Sharavanan from Unifi Capital. Please go ahead.
Yeah, thanks for taking my question. Sir, now in the specialty chemical segment, we have 2 commercial contracts for intermediate supplies. And last time you had mentioned that 1 or 2 more could be added by end of the year. Is that on, sir? Are we on schedule?
Yeah, 1 is certainly will be added as early as first quarter of next year. That is fiscal 22. And, the other one is in the developmental stage, and that will be sometime in 22.
Okay. And similarly, pharma, you said like 1 would go in the commercial in calendar year 2021. So you have any visibility whether it will be in H1 of the calendar year or H2?
Not yet. No indication was given. So as of now, it's unlikely to happen in H1. If at all, it will happen in H2.
Okay. And sir, now, Rising Pharma, they would have closed their annual results. I reckon they would follow the Jan to December calendar. So do you have any yearly update and what is the outlook for the next year from them?
That you will be getting only at the consolidation only, but we are not going to give the thing because we're a minority shareholder. We're not running the business. But as you could see from the line items quarterly, the things are doing well. I think it will continue to do well.
Okay. So, any other qualitative aspects you can say, like a number of projects they're handling?
No, I cannot tell. That is the private limited company.
So last year we had 48 crores of share of profits from them, and 9 months we have done 35. So you expect to surpass the last year number given the traction is good there?
That we will know only after I get the profit share from them after their thing. So like, as I said, I'm not running their business. I don't look after day to day. My job is now is the financial investment. We will know post facto, and we hope to achieve the same thing. That's what our at least get more out of it, but we don't know until it comes. So I cannot guarantee anything on that. It's not in my visibility.
Okay. Sir, on the project front, you mentioned that, it was a positive update that you are seeing sign up of new research projects, and so that would ensure the growth for FY22, right? FY22 and FY23. So it is all billable projects, right? Or it is just in discussion stage?
No. These are things. See, we get discussions many. What we only update is the things that will come into developmental stage. And they will be built maybe quarter 1 or quarter 2 or quarter 3, depending on the duration of the study and all that stuff. Because it takes 6 months in the initial stages. So, things are, as I said, things are compared to the first 2 quarters, now things are coming to the normal, and we saw some new projects addition is being done. But these new product addition is only the billable, only what we talked about always. Not the RFQ. Not the RFQ.
Okay. Fine, sir. Thank you. I'll join back the queue.
Right.
Thank you. The next question is from the line of Darshit Shah from Nirvana Capital. Please go ahead.
Yeah, sir. Thank you for taking my questions, and congratulations for a great set of numbers. Especially the margins of 50% was very overwhelming to see. Sir, my question is on a broader base. If you could throw some light on that, sir. In earlier calls as well as in the annual report, sir, we had mentioned that we are planning to do a value migration from intermediates to API. And that itself would be another 30-40% value addition in terms of what we are doing currently. So, sir, what's the progress of that? And in addition, you mentioned you're already in talks with 2 innovator MNCs for some projects which might happen over a period of time. So, sir, is it part of a broader things which you are working on? If you can share some light on that, and is the 600 crore Capex also a part of that overall plan of things? Sir, we as investors would be delighted to hear your thoughts on that.
So, it is the same as last quarter. Things are going on well. The discussions are going on, and since the travel restrictions are there, even though if they want to proceed further, they want to come and audit based on their API requirements by QA teams, which is not happening. So it is, but it is in the positive direction. Things are going on, sharing the documents and all that stuff. But the Capex is not necessarily for that. The Capex, as I clearly said, 80% of the Capex is a replacement and relocation. Replacement of the old block and relocation of the R&D center. Only 20% of the 600 crore Capex is meant for some kind of a balancing and additional small block. So it is not necessarily for the API. Right now we have enough capability and the capacity. And there will be some balancing equipment we needed based on the product, and when the product starts, we have enough time to set in place because we don't need a separate block by itself. So, it is a status as of today, but we are going in the right direction. But it takes 2 to 3 years before you see any revenue accretion based on that.
And sir, would it be fair to understand that if at all, whenever this value migration happens from intermediates to APIs with whomsoever we are talking with, then obviously the scalability and volume front would be a little higher than what we are doing in intermediates because it's another 30-40% more value addition. Would it be safe to assume that?
Not necessarily. In a sense, if you are doing an intermediate quantity, but at the same time migrating the API, the requirement of the API, the value terms may be better, but sometimes the volume may be less than what the intermediate requires. Sometimes the API requires 3 kilos of the same intermediate what we are talking about. So you cannot cut up with the volume terms. Value-wise, yes, it will go up, but not the volume-wise.
Yeah. So, sir, my question was on the value front itself, and that would eventually result in incremental sales growth of that.
Naturally, but that will be 2 years from now at least.
Correct. And sir, in terms of next year, my last question on FY22, sir. So in terms of growth, we can expect that probably the growth will come from newer projects which we are getting, plus on the specialty chemical, couple of molecules might go into commercialization, as well as the pharma CDMO one molecule which might probably go into commercialization H2 FY22. Is my understanding correct?
Yeah, it's a mix of each and every part of it. See, what happens, not everything goes up, keep going. They were telling last time, specialty chemicals is a static nature, especially the first one, because they're getting their patent out and it's becoming generic, so the volume may go down a couple of years from now. Right now, for next 2 years, not a problem. The additions what we're getting is value-wise it may be better, okay, but not your volume-wise. The first product is a volume-based product. Similarly, yes, anything can happen now. Suddenly, a couple of molecules from phase 1 to phase 2, and a couple of molecules from phase 2 to 3. Then suddenly there is a 30-40% growth can happen. But right now, the visibility is not there. It is a mix of all these things that gives you the growth of 15 to 30%. I cannot pinpoint which one is giving now at this time.
Great, sir. Thank you for answering my question, and we wish you all the best in closing this talks which you are having with currently few MNCs. Thanks a lot.
Thank you, sir.
Thank you. The next question is from the line of Gokul Maheshwari from Auriga Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, could you just give in, for FY22, what is the plans for launching the ANDAs? And related to this is that are these new launches having a better revenue potential than the ones which are launched where you have indicated $2 to $4 million of revenue?
No, these are all very, very small volume and value-based products, and it will not be more than what we are doing it, and it is a number that maybe 3 to 4 to 5 can be launched during fiscal 22, and post 23 onward there is another product which will be which we are working out, and if everything goes well, that will give us a better revenue because it's a 505(b)(2) kind of stuff. So going in that direction. So it is not like other pharma companies where you see a lot of volumes and based on the approvals. That's why we don't say until Concall. The values, as you could see, is very small at this time, and we are trying to grow that because that is a value addition for us with the profit share that comes into the picture. And there are not many competitors also, so that we don't have to worry about but the value is less.
Okay. And with respect to the specialty business, would FY22 would be better than FY21 directionally?
No, maybe it's in the same range, not much 5 to 10% growth at all.
Okay, fine. And lastly, just a couple of points. One is on the plans to hire a COO, where you were on the looking out for someone. Is there been any progress on that front?
COO. There's a progress and no progress in the sense that we have looked for somebody and we cannot relocate at this time because of the COVID situation. So we're still looking for it.
Okay, fine. Just lastly, you mentioned in your opening comments on some logistic problems. Is that a hindrance for the short term, where some of the projects would have got spilled over for the subsequent quarter?
I think what's happening is sometimes we are getting the imports delay, and sometimes my customer is getting the delay because the shortages of containers and all that stuff. Not only the transportation has almost doubled in sea freight and also almost 50% more in the air freight also. These are a little bit things which are affecting us. But in general, with the advance notice to the customers, and they are not getting any pinch of it other than a little bit cost for us.
Okay. Okay, great. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Pranav Mukherjee from Ampersand. Please go ahead.
Hello.
Yes, sir.
My name is Sanjay. So my question here is that in the first 2 quarters, you had mentioned that because of travel restrictions, you were not able to close new contracts, and you just mentioned that you have managed to get new contracts, basically revive those process. So have you managed to kind of compensate for the time that you lost in the first half?
How is the results showing up? There is no effect on the results, right? The project's accumulation is not only for me, for everybody else. It's not the travel restrictions that is causing me not getting the new projects. It is the customer itself. They are not having any, they are not even going to their offices even now in Europe and America. They're only working out of the home. And they're only working out of the home, but started moving because they have to prioritize projects, and then they're doing them. Last quarter we could get it, but it's nothing like compensating for anything. As long as you're not losing your business on a day-to-day basis, then it's not a compensation. It will come, and also it is not a guaranteed thing. Not each project that comes in will stay forever, because these are all the clinical trial-based projects. So how many comes into the next level, we don't know. So things are moving well. As I said last time, also traction is better, and it's not that 1 or 2 quarters loss will stop us getting good growth.
Understood. And so my next question is that the couple of molecules, etc., which you're talking about, more of second half fiscal 22 and fiscal 23, and you have always told us not to really look at quarter on quarter. And since your current guidance is only for 1 more quarter in this year, so is it kind of sufficient to kind of conclude that overall full year fiscal 22 and 23, your this 15-20% kind of growth is something which you can continue despite all the hitches that we saw?
That is our wish, and going by the past records, that's what's happening. But at this time, I don't have a crystal ball in front of me, that no visibility other than for 1 more quarter, which we will not be able to give based on that 1 quarter for the whole 1 year. But as I said, we'll keep updating you as and when we get a better guidance. So as of now, we are sticking to this year's guidance, and next year we hope to achieve 15% growth.
Okay. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Cinderella Carvalho from Centrum Broking. Please go ahead.
Thanks for the question, sir. Congratulations on great set of numbers. So things are performing as per our expectations. There is a revival.
Sorry to interrupt you, Ms. Carvalho. Sir, this is the operator. Sir, there is slight disturbance coming from your line, sir.
Can you hear me properly now?
Yes, sir. Thanks.
Okay. Yes, Cinderella.
Yes, sir. So, sir, what are your key priorities now, as you know, things are looking up, things are better. So how are you looking at things on a segment wise or overall perspective, if you could enlighten us with some thoughts?
I mean, we are very optimistic, and but at the same time, the optimism will not bring the business the results. Things are much better traction, but only the successful molecules are the ones which are in the pipeline will give us the results. But in general, yeah, it is very optimistic, and I don't see any Because even though there is a COVID, that did not really affect our growth. So whatever growth we promised is coming in the way, but there will be delays in the prioritization of the projects from the the customers. But those are a very small volume acquisition in the beginning itself. But in the long run, they will catch up, and we are not worried about that part. In general, the industry is doing good, and that will bode well for us to get the more new projects. But finally, the successful molecules in the clinical trials is that one that gives us the business. So, yeah, we are quite optimistic.
Okay, and so any other new technologies that you are, or platforms that you are thinking of bringing on board, or something on that side?
Yeah, we are in the process of looking for the, first of all, unlike other companies, I cannot put some platform technology unless the customer needs that requirement, and we are evaluating with the customers what their new requirements will be. Based on that, we are trying to do, and one such thing is the continuous flow chemistry. That's what we are trying to develop, and hopefully we may be able to get ready for that activity sometime in the fiscal 22.
And so on the Capex nitty-gritties, you will be able to update us on the next quarter.
Yes, sir. Yes, ma'am.
And so just the clarity on the spec chem, Q4 will be more loaded with the spec chem quarter. Is that a correct understanding?
Yeah, not necessarily more, but it will be more than what the third quarter is.
Yeah. Okay, sir. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Abdul Puranwala from Anand Rathi. Please go ahead.
Hi. Yeah, thank you for the follow-up. So on the Vizag plant, so could you please update us with the progress, and how soon can this plant be now commercialized?
Yeah, we just doing the validation batches already, and some revenue will accrue this quarter.
Sure, sir. And so second question was on the dividend payout. Now that we have declared the dividend this quarter, so any target payout what we would have on an annual basis?
I mean, we are paying every year, no?
Yeah. So
we are paying, right? We never missed any dividend. But we only pay more or less once in a year. That's all we do, right?
Right.
Yeah.
No. So my question was basically with the kind of cash flows we have.
Yeah. Kind of expenses also are planning, right? So you see that one. So it has to match that.
Sure, sir.
Yeah.
All right. Yeah.
Okay, I'll be the beneficiary, right? If I can get money out.
Right. Sure, sir.
Right.
Thank you.
Thank you. The next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Yeah, good afternoon, sir, and congrats for a good set of numbers.
Thank you.
If you could just update what is the current status on debt on the books and how much is now payable to Suven Life as on December?
Yeah, the Suven Life, what we are supposed to pay is about 66 crores. And then apart from that, actually, we have a debt of about 104 crores of working capital and term loans.
And what is the schedule of repaying this remaining money, that 66 crores to Suven Life side?
What is it again?
66 crores.
What is the schedule of repaying the 66 crores to Suven Life? How will it be repaid every quarter? Or
as and when it's needed. It may be needed in 3 months, or it may be needed in 6 months. So I think it will be by next the maximum way our September time frame we may be able to.
December anyway.
We can pay any time, but what I'm saying is the requirements, based on the requirement, we'll pay.
Sure, sir. And secondly, is the existing ongoing Capex other than the 600 crores which we have freshly announced, that is all over now, sir, or is there some pending Capex from ongoing Capex also?
The earlier Capex, another 25 to 30 crores on the earlier Capex will be done by the end of this quarter. So the fresher Capex of 600 crores will start doing in the first we'll have a clarity on where, how much, because we are getting all the quotations and requirements and all that stuff. And we'll finalize the budget by the April time frame, so I can give an update on that by May Concall.
Can you just share how much we have spent on the Capex in the first 9 months, sir?
How much the Capex in the first 9 months? We have continuing Capex here. No, so far we have 79. So far we have spent about 439 crores.
In
on the
the current financial year?
320 crores. No, financially, how much you have any idea? This is the continuing. No, what is the 9 months? 9 months only. So it was close to about 94 crores if I remember well, but we'll be able to update you on that.
Sure. Thank you.
All the updates will be updated. Okay, thank you.
Thank you. The next question is from the line of Dipali Pataria from Samiksha Capital. Please go ahead.
Hello, am I audible?
Yes, you're audible.
Yeah. So, first of all, congratulations for the good set of numbers, sir. My question was more on the project side. So, I understand from the previous interactions that we are good in few chemistries like chiral chemistries, and we are trying to get into other chemistries like pyridines and continuous chemistries. So, can you give a bit more understanding on what are the chemistries that we specialize in, and what is total market size of those chemistries? So, yeah.
See, we practice in each and every chemistry except phosgenation and fluorination in gram level to multi-ton level. It is a requirement of the customer that makes us practice that chemistry. So we don't have any problem with respect to the chemistry. We don't do the fluorination, as I said, and also the phosgenation. Other than that, we do each and every chemistry. It may be in the gram level, it may be kilo level, or it may be in the multi-ton level.
Okay, thank you, sir. And so, regarding the market size, so do we have any numbers that what market size of those particular chemistries are? So overall, we see that for NC-based markets around $20 billion for us. So, do we have such numbers for those chemistries?
That is beyond me, because all the pharmaceutical market other than the biologicals is a chemistry-based activity. So it is what we get from the customers and what we deliver based on the success of the molecules in the clinical trial is what our kitty is. But just because there is a huge billions and billions of dollars thing doesn't mean that it's correlatable to our business. So chemistry-based activities are huge. Not only pharmaceutical, but also agrochemical and plant chemicals and specialty chemicals and all that stuff put together. So you cannot correlate that way.
Okay. Thank you, sir. That's it from my end.
Thank you. The next question is from the line of Rahul Garg from Shifa Family Office. Please go ahead.
Thanks for the opportunity. So my question is on Capex fund, like funding nature. Is it like going to be a mix of debt and internal accruals, or we are looking for other options? That's question number one. Question two is like number of clients or projects onboarded in Qtr3. And can we put the full stop on rumor on stake sale in this call?
The rumor, you said itself a rumor. Why should I put a stop on that? Let the rumor fly like that. This is going on for the last 15 months. I cannot keep on telling every day that this is a rumor and that is a rumor. Let's not worry about that part. As far as the Capex is concerned, it is a part cash, part internal accruals and part debt whenever is required. Otherwise, it may be fully internal accruals only.
Okay, and how many clients have you onboarded, sir, in Qtr3 or projects?
It's not like IT where we have onboarding so many projects. We don't get that many customers quarter-on-quarter basis. The existing customers only gives us the a new business opportunity. In general, it will be one or two new customers per year. It will happen, not quarter-on-quarter.
Got it. And do we have any presence in biologics chemistry, that side of the world?
Biologics, we are not in that.
Okay. Thank you so much.
You're welcome.
Thank you. The next question is from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead.
If you could throw some light whether there is any one-off execution orders during this current quarter?
No, there is no one-off.
Okay. Right. Second, in terms of order book movement, how is the order book moving? Are you seeing any slowdown because of the lockdown?
No. As I was telling before, maybe you did not hear it, that compared to the first and second quarter, now it is moving better with the new projects acquisition. And order book is good as of now. Based on that only, we are giving this guidance. But as you know, our visibility is only for about 6 months.
Okay. And this type of EBITDA breakthrough of 50%, I think, would be the best in the industry. How frequently can you see this coming?
I want to get it every quarter, but at the end of the year, you may not have that number. It is a product mix, and sometimes it happens, but don't expect that to happen every quarter, rather.
Okay, product mix. Can you elaborate?
We hope to have it, but...
So based on the product mix, madam.
Yeah, can you elaborate a little more on that?
No, it's like this. I mean, if you get the late stage material, the cost of goods is, when you make the volume compared to the small volume, the cost will be reduced and the profit will grow, and also the value which we ascribe to the number of steps that are involved in the chemistries. That's what we are trying to tell you, that is the product mix. So based on that also the value will come into the picture. And it's many things combined. It is not one thing that led to this one, but it's mainly the product mix and the value proportion that brings based on the chemistries we have and the number of steps we do. And what happens is I may have started this project to deliver after 7 months or so. So the value will accrue in this quarter and it will show you robust growth in here. But finally, you have to say it is the product mix that gives you these kind of things, but not always, because sometimes less value-added products will be there, more specialty chemicals will be there. So at the time, the volume of the top line may be better, but on the bottom line maybe not that rosy. That's what it is. But at the end of the year, we have said we would like to be in the range of 40%.
Okay. Right. Yeah, and can you give some breakup of projects in terms of...
We stopped giving since 18 months because it's not correlatable, because the number of projects has no meaning. It is only what gives you the project, and it is difficult to give breakup on that, and that's why we have dispensed away with that number of projects.
Okay. Thank you, and all the best.
Thanks a lot.
Thank you. The next question is from the line of Purvi Shah from Kotak Securities. Please go ahead.
Yeah, thank you, sir, for taking my question. Firstly, congratulations on the great set of numbers.
Thank you.
So my one is a bookkeeping question and the other is a broader one. So starting with the bookkeeping, I would like to understand the cost of debt that we have. I mean, I understand you've said 104 crores is the working capital and term loan. So at what cost is it?
It will be around 5%.
5%?
Yeah, under 5%.
Yes, sir. Thank you, sir. And so just a broader question that I would like to understand is, so in terms of COVID, as we know that as a country, we've been faring quite well, and we've not seen a second wave so far, touch wood. But in the other countries, specifically US and Europe region, we've seen the second wave coming back, and as I've been talking to other companies also, they've been facing some issues in supply of raw material, which has led to increase in the raw material cost, and the other was the logistic cost, which has also spiked up. So are we seeing this affecting us in the upcoming quarter or in the near term? And how do you see these costs for us?
I mean, there is incremental cost on the logistics and the raw materials and all, which we are now observing. But if it is exorbitant, then we'll request the customer to take some part of it and sharing the additional cost. Those are the things, and that's what I was telling. There are some irritants, but in all, it is keeping. But there is no shortages as of today, and like what we used to have, and only some delays are happening, which we, in collaboration with the customers, planning properly so that they don't get disturbed or we don't get disturbed. Things are otherwise going okay. There is slight, maybe 3 to 4% additional costs are happening on some parts.
Okay. So just a last follow-up on it was that, like you said, of course, that the 51% margins is something that you would like to have every quarter. But I understand that's not that. I would also like if it's consistent enough for the upcoming quarters as well. But what is the broader range that you feel that these are sustainable, irrespective of the logistics or raw materials price factor?
What is it?
Is it sustainable? The 51% EBITDA?
No. 51% EBITDA is, I said that is based on the product mix, but that's not a sustainable thing. But I have given a guidance of around 40% on EBITDA. Is that the question you're asking?
Yes, sir. So my question was, yes, that I understand that 51% is not sustainable, but what is the sustainable margins that you're looking, irrespective of the raw material spike and the logistics?
Around 40%.
40. So that's quite a sharp, okay. Fair enough, sir. Not an issue, and all the best, sir.
Thank you.
Thank you. The next question is from the line of Anshul Sehgal from Kotak PMS. Please go ahead.
Thanks for taking my question, and congrats on great results. Sir, your formulations revenues for this quarter were about 23 crores. How much of was the contribution from rising pharma sales in this 23 crores? As also for the 68 crores for the 9 months.
So we are not giving customer by customer things, and we are only giving you broader numbers. So we are not giving the breakup of the sale price, breakup of the profit share, breakup of which customer, and all that stuff is not possible, and we'll not be giving that. And we are saying only these are the formulation revenues, and it will go by 20 to 25% as of today.
Sure. And just qualitatively, will it be a substantial number as a proportion of these revenues, with sales to rising?
No, it's not substantial. It's normal only. There's nothing like whatever guidance based on the existing sales, so we are giving you guidance of 20 to 25% growth for the next 1 or 2 years.
Okay. Secondly, are we looking to, the Capex that you're doing, 650 crores, in this, are we looking to move from, say, development batches towards more mass API manufacturing? Or will there be a component of that in this Capex?
No, I think nobody is listening to me. I keep telling this is 80% is for the relocation and rebuilding one of the old blocks. Only 20% is going for the balancing equipment company, some new small block. It is only the relocation of the R&D center and the replacement of the old block, a 95-year-old block in Suryapet. Those are the main cost drivers. The other 120 crores will be for a small block in the Pashamailaram. So the budget estimates will be finalized after getting all the quotes and all these things by the first quarter. And we will have this timelines and all. It will take 2 to 3 years for all this. It's not going to be in 1 year. 2 to 3 years time frame. So we'll give you that update in the May conference call.
Got it, sir. My only question was that will the, since you're saying that most of it will be replacement of existing assets, will it include any incremental, business from these assets, or will it be just the same business that you're doing just now, and it will only be upgradation of assets?
It's only upgradation.
Okay, got it. Thanks, and again, congrats on great numbers.
Thanks a lot.
Thank you. The next question is from the line of Akshay Sam from Atman Capital. Please go ahead.
Hi, Mr. Jasti. Congratulations on a very good set of numbers. So I just had a couple of questions. As you may know, a lot of these new novel drugs are, the market share of biologics is slowly increasing. Do we have any plans, say, in the future to acquire such capabilities? Because a lot of our competitors, such as Laurus and Syngene, possess this capability. So do we have any plans in the future to venture towards that?
As of now, no, sir.
Okay. So, secondly, do we only cater to big pharma companies, or do we also cater to a lot of these smaller asset-light, nimble pharma companies? If yes, what will be the contribution from both of them?
We only deal 90% of the time with big pharma. Only virtual companies and the small boutique companies only forms part of the 15 to 20% with franchise pharma. But the main customers, because it's innovation and growth, it comes from the clinical trial-based activity. It comes from the big pharma, not the small ones.
Thank you, sir.
Okay.
Thank you. The next question is from the line of Rohan Advant from Multi-Act. Please go ahead.
Yeah, sir. Thanks for the opportunity and congrats on a good set of numbers. Most of my questions have been answered. So just one broad question. If I look at the history of our CRAMS business, it has been a very lumpy business year on year, and especially in years where the commercial contribution has been very high, the next year on that base to grow has been very difficult. But if you look at the past 2 years, FY20, we've done really well. 21 on that high base, we've done well. So I wanted to understand what is the underlying, change that has happened, if at all. Is it that, more molecules are moving from phase 1 to phase 2? Is it that the commitment from the sponsor is higher versus what it used to be? Or is it that we are having more projects in phase 1 or more commercialization? So while I don't need the a number of projects, what has caused the sustainability of growth rate even from high base and the outlook for that? Thank you, sir.
Yeah, all these put together, you can say the answer, but at the same time, 4 or 5 years ago, we do not have a commercial product, only the mix and match of phase 1s, 2s, and 3s. So there is no guarantee that it will generate some revenue. Even the commercial, it will not give you year-on-year revenue. Maybe 18 months time frame or 24 months time frame. So some base loading has happened with the commercial things coming into picture, and these mix and match is adding to that one. So that's why you see a little bit sustainability at this time. As the number of molecules moves into the commercial, and the base loading effect will come into the picture, and this mix and match added to that, then a little bit more sustainable and more, projectable things will happen. So this is the nature of the business. As long as it has to start, and when it starts and as the accumulation takes place with respect to the commercial projects, even though it may not give you year on year, but certainly something will come. But in the phase 1, 2, 3, if it doesn't move to the next level, there is no revenue accretion after that. But with the commercials, it will happen. So you see there is a difference between 3-4 years ago compared to the last 2 years.
So some or the other commercial molecule will, cross that 18-month barrier every year, and so there will be some sustainability. That is what you are saying, right?
That's right.
Yeah. Thank you, sir, and all the best for the future.
Thank you.
Thank you. The next question is from the line of Ankush Agarwal from Stalin Asset. Please go ahead.
Yeah, thank you for the follow-up, sir. So firstly, on the rising business, one of the thought on investing in rising was that we will have the first right of refusal on the future development projects that rising undertakes, and you were expecting that you will get 2-3 projects every year. So if you can help me understand how are things progressing on the business from rising?
There is no first right of refusal. That's the wrong thing to assume. We said we have the opportunity to bid for some of those things which fits into our capability. That's what it is. Not a first right of refusal.
Okay, so on the 2-3 projects that you're expecting every year to flow from rising, are there any developments on that front?
No, it will be from everybody, but not alone from the rising. We have 5-6 customers, and it will be a mix and match for the other customers also. Right now, we have 3 projects from rising. The others are all from other people.
Okay, 3 from rising, right?
Right.
Okay. And secondly, sir, in terms of a medium to long-term perspective from the 5 years, since we are doing a lot of things in terms of, doing the life cycle management for few global innovators in medium to long term, and also that we are pushing our ANDA, this formulation business. Where do you see, for the 5 years from now, the business in terms of, how much would be pharma business, how much would be the formulations and all that?
See, we never give these 5-year projections. It's only 5 months to 6 months projections. But as you said, these things we are only learning in this new business of the ANDA. So I cannot predict how much it will be. But right now, for the next 1 or 2 years, it will be based on the existing things at around 20% growth minimum. That's what we expect.
Okay, fine. Thank you, that would be.
Thank you.
Thank you. The next question is from the line of MS Rajashekar, individual investor. Please go ahead.
Good afternoon, sir. I'm an individual investor. I've been with you for the last more than a decade. I've really got benefited by investing in Suven. Thank you so much. All my questions have been answered. My basic question is, I really appreciate the passion with which you are running the Suven Pharma as well as Suven Life Sciences. I just want to understand, what is your future vision for Suven Pharma? Where do you want to take the company in about 4 to 5 years' time? I just need a qualitative answer, not a quantitative answer.
We make one step at a time. We have all the ideas of what should be and all that stuff, but at the same time, it's not possible unless you are a generic-minded, then I can say I want to achieve 1,000 crores or 10,000 crores, whatever it may be. But when it comes to the innovation and growth, we want to enhance from the intermediate to the penultimate to the APIs in the innovation side of supply chain. And of course, it all depends on the success of the molecules in the clinical trial. So we take one step at a time, but I cannot leap forward into the 5 years from now. But I have hopes of doing so many things. But to achieve that, it has to be a collaborative effort, and that's where we are trying to align with the innovators. And thanks for collaborating with us for the last 10 years and staying with us.
Thank you very much, sir. So definitely we are going into APIs, correct, in future?
Yeah, innovative APIs, yes, that's what our intent is.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Vayanathan, individual investor. Please go ahead.
Good afternoon, sir, and congrats for a great set of numbers. Just to get a few insights into the mind of Sri Justiji. One is a follow-up question of what the previous person had said. your journey has been a long one, and with a 1.5 billion market capitalization after 2 decades. What's next, basically? Are you satisfied with this particular set of achievements, or what are you trying to achieve more now? And how do you plan to do it? Is my question number one, please.
See, the thing is, you'll never be satisfied. No, neither you are satisfied, right? Even after making so much money in the market, whatever it is, you will not be satisfied, right? It is what it is, and what we have to achieve, there is no change, as I was telling the customer. We are not going to leapfrog in things, and we are doing things which is good for the business, good for the customer, and it's a collaborative effort. And also, finally, it is the success of the molecules in the clinical trials will be our success, and we cannot give you long-term projections. As I said, I can go stepwise, and that's what it is.
So thanks. And second question regarding Suven Life, regarding the Suven Neurosciences, which was supposed to, you're exploring the possibility of an IPO in the US. The fastest way nowadays, I believe, is the SPAC route, the special purpose acquisition companies, which are now in the limelight in the US. And the fastest way for any company to merge is to get into the US market, the NASDAQ or the Dow, is through the SPAC companies. Are we also exploring such a possibility, please?
Our Neurosciences is a US subsidiary, US entity only. It is a wholly owned subsidiary of Life Sciences. And we are working with various options, and it will take time. Because as I was telling the other caller, that success of the molecule will give you the value addition, either for the IPO or the collaboration or something like that. So we are now going on achieving that success. Only the success will come after the clinical trial is over. This COVID delayed us by 15 months, and hopefully things will move in the right direction in the next few months. We are working on various opportunities, but nothing is finalized yet.
Thank you, sir. Thank you very much indeed, and I wish you all the best, and wish your family too, and along with all your employees and colleagues, please. Thank you. God bless you.
Thank you. The next question is from the line of Mayur Damani, individual investor. Please go ahead.
Hello. Good afternoon, and congratulations for excellent set of numbers and covering the deficit of H1 in the Q3, and I expect the same to be covered in Q4, and you keeping up the guidance of 15 to 20 annual wise. So my first question is related to Suven Life Sciences, and the last Concall you had mentioned that we have sufficient cash to manage the show for around 9 months or so from the last Concall, 9 months to 12 months. So what is the current situation of that? I just want to know so that maybe we can expect something after 9 months.
See, at the time, things are, not this slow based on the COVID, for the next activity to take place. Still, we are working out various options, how to fund that one, and we have not finalized, as I was telling to the customer, neither an IPO nor the asset-based collaboration or pipeline-based collaboration. All the things are going on well, but nothing has been finalized yet.
Okay. And my next question is regarding generally with respect to succession planning at the senior management level. This is further to the previous questions. I have been with Suven family for the last 10 years, and I intend to be so for the next 10 years as well. But I just want to know, any induction of any professional management from outside, though I'm very confident on Dr. J.D. Singh and Mr. Srivedi and others, but still your guidance and support, that is Mr. Justice's support and guidance will always be there. But if I intend to hold the Suven group for the next 10 years or so, any sort of succession planning in place?
Yeah, we're working out various options, mainly the professionalizing this thing and getting a professional for this kind of a company is a very difficult proposition, but we are working on that direction. Also, we are working with the family-based services for the second level of operations. That is also going on with the training going on in US. Things are okay. I mean, right now it's not a need at this time, but we are looking for a proper person rather than just jumping just for the sake of jumping into it.
Okay. That's very much. And best of for the future, sir.
Thank you.
Thank you. The next question is from the line of Vineet Gala from Monarch Network Capital. Please go ahead.
Sir, at the outset, congratulations on a great set of numbers. Sir, my question is related to Rising Pharma Holdings, the investment that we have, and related to the previous participant's question on us not having the first right of refusal. So, sir, what I understand is that we ourselves gave the guidance statement that we had the first right of refusal in Q4 FY20 Concall. So wanted some more clarity on the arrangement we have with Rising, sir.
What I mean, we don't have a first right of refusal, first opportunity. Right of refusal has a different meaning and first opportunity is a different meaning. And also you need to say, not all the products we can manufacture, not develop and manufacture. Whatever that puts into, gets into our capability, that only we will ask them. It's not a first right of refusal. If you use that word, that's wrong. It is a first opportunity to bid for it.
Right, sir. So, sir, like my understanding was from the comments we made during the previous conference call is that most of the opportunities would come to our table and we would pass it on. So, is it like that or how the
not most of the opportunities. I said that whatever that fits into our capability, not everything will fit into our capability, right? So if it's the sterile thing, that does not fit into our capability. And also the number of projects they develop out of that kitty only, but not everything that they market it, because they have so many other customers also. But as I said, we have the opportunity to bid for it.
Fair enough. So, sir, like, is it the case like if we are strong in a certain capabilities, so in that case we get any kind of say like a upper hand vis-a-vis the other competitors who are bidding for the same product?
There is nothing like an upper hand. It should be on the same level. I mean, why should the Rising Pharma give us an opportunity when they are getting a better deal with some of the customer? We have to be competitive enough. So only the opportunity to bid for it is there, and they will give you preference if you are in the same range.
Okay, so that's it from my side.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Thank you all again for tuning in for this conference call of the earnings. And as I was telling you in the beginning that things are moving well, even with the COVID situation, barring some problems with the logistics and some cost escalations. Some gap for the first 6 months we could fill in this quarter, and we hope to achieve the 15 to 20% growth as promised. Made their calls for the whole year, and thanks again for tuning in, and talk to you sometime in May. Thank you.